Hey folks, Dan Frio here with your market update for June 3rd, 2024. If I seem like I'm slurring or there's some spit flying out of my mouth, there is, because I just had a root canal done and I'm trying my best. So without further ado, let's figure out what's going to go on with the real estate this week. So last week we had a nice reprieve at the end of the week. Look, the 30-year fixed over there went down 1/8% in one day. Well, those numbers are going to continue. They will continue through today. Why? Let's get over to the calendar and figure this out. The first thing I want to go over, and I like doing this format. I like showing you guys what CMB's headlines are because I get feeds right down through here. This is all pertaining to real estate. Retail earnings are starting to show some really signs of weakness, but today we have the ISM manufacturing indexes, and you probably have never even heard of them. And if you have, you're probably like, okay, what does this come into play? Well, basically what you need to understand is, as the economy cools, it's what the Fed wants. Okay, so every time there's bad news, it's good news for our economy because we need the Federal Reserve to pivot off these high rates. So let's look at the report from Rick Santelli this morning. Then I'm just going to put it in plain English for you guys, and then we're going to continue to go through what economic data is coming out the rest of this week and how I feel that's going to have an impact on mortgage rates. So without further ado, Rick, can you take it away for me, buddy? Prematurely.
Bonds like this ISM's number. Let's get to Rick Santelli. Hey, Rick.
Yes, Carl. Construction spending for the month of April, we're expecting a positive number, but instead of up 0.2, we're getting down 0.1, which follows down 0.2, which means we haven't had a positive number this year. The last positive number was December when it was up nearly 1%. On the ISM manufacturing for May, and these, of course, are following the S&P Global, we're expecting a number below 50, and it remains below 50. Manufacturing at 48.7. That's the weakest since February of this year. If we look at prices paid, last month at 60.9, it was the highest in nearly 2 years. It has backed off a bit from 60.9 down to 57. 57 would be the weakest since March of this year. And, of course, we haven't been below 50 in this read since Dec of last year. And, of course, prices paid, well, less inflation may be a good thing. On the new orders, 45.4, the weakest since May of 23. And finally, the ISM employment. This is particularly important because this week, of course, we have ADP on Wednesday and the big jobs report on Friday. This number is above 50, 51.1. That is the best since August of 22. You see interest rates moving down a bit there. I'm sure that's probably a reaction to prices paid. We'll continue to monitor the long end. Right now, we're down nearly 9 basis points in a 10-year note and about half that in a 2-year note.
The latter part of that is this data right through here. So let's go down to the data that he just composed. He said the manufacturing PMI, that's the only one that upticked. That's what first came in this morning, and I'm like, that's not good news. I'll show you why in a second. Then we had the PMI manufacturing numbers. My lip is completely gone. Went from 49 to 48. And then the prices 60 to 57. So this is fantastic news. Here's the first piece of data that came out this morning. I'm like, this isn't good news. Okay, went from 50. The manufacturing PMI went from 50 to 51. Okay, so here's what happened on May 23rd. This is right when I got back from Florida last time, and rates went up about 3/8 in one day on this data. So the number previously went from 50 to 50.9, and the markets basically had a huge increase in rates. So when this number first came in, I'm like, that's not good news. But then as we progressed through, we saw some other numbers. This number right through here, manufacturing prices, the prices went from 60 to 57. Anything that's basically a negative is, we'll consider that good news because, again, bad news is good news. And then the other piece of the puzzle that we have right through here is this number also went from 49. This is the manufacturing purchasing index, went from 49 to 48. So again, if it's going down, that means it's basically a retraction in our economy. So that also is good news. So it looks like the good news is outweighing, or the bad news is outweighing the good, however you want to look at it. Well, let's get over to see what how the markets are reacting to this. So we go right through here. And this is what's happening with the mortgage rates right now. So if you're a little confused, let me break this down. So what you're seeing on your screen right now, this is a mortgage bond that trades on Wall Street. We watch this because it's what you should be watching. You don't watch the 10-year Treasury or the federal funds rate or anything like that. If you really want to focus in on mortgage rates, you check out this. Okay, so what this means is this is what's happening to the price of the bond. All right. We want the price of the bond to go up. Here's what happens. If a price of a bond goes up, any bond, the yield or the interest rate goes down. Well, because this is a mortgage bond, if the price goes up, mortgage rates are coming down. So this is a nice little move right through here. And you're going to start seeing lenders starting to reduce their rates throughout the day. So right through here, let's just go to a one-day chart. We started the day right through here. All these little orange dots here, these are mortgage companies or banks posting new rates. And because we had this nice rally, that means rates are going down. Okay, so fantastic news so far right through there. Let's get to the headlines on Yahoo Finance to figure out what the news is for today. And we go over through here, and here's what we're seeing. U.S. factory orders kind of are contracting. Treasury yields are coming down. And then we have that Fed Kashkarian guy that's talking, and he's always out there. And remember, folks, he's a hawk, meaning we always need to be raising rates. So if you click into what he's saying right now, you scroll down through here, and basically it says right through here, as a result, Kashkarian, who has led the organization since January of 2016, had some bad news for Wall Street. He doesn't believe in any rate cuts coming soon. So good thing he's not a voting member this year, and because he doesn't have a vote right now to say that he's going to increase rates. So that's all that we have so far for today, folks. So let's see if Mortgage News Daily reposted their rates for today. Going through there. Yes, they reposted. So we are down 6 basis points. I'm expecting that to go down even further. If you're out there and you're trying to find your first house, okay, let me explain who I am. I'm actually a mortgage loan officer. I'd love to help you. Here's where I go crazy. People say, hey, Dan, I got 5 pre-approvals. Can you look at them and see if they're okay? Well, get one from me. Okay, so here's what I do. I'm actually a mortgage broker. I'm licensed in all 50 states. So if you're out there, I can help you. So I'm set up at this time. I used to be set up with about 70 different lenders. We didn't need 70. Half of them, we were doing a bunch of paperwork for no reason. They didn't have programs that really wowed us. They didn't have great rates that beat anybody else. So we just stopped using them. So we're down to about 35 different lenders right now. So here's what this means to you. Do you want to spend every day going through and calling people and getting pre-approved and having them pull your credit and putting in an application? What if I could say there's one application, one credit pool, and I can shop your loan over 33 different lenders? How do you do that? Well, just hit the Apply Now tab right up there. But before you do that, I got a special for you. Hit the grant program. This is going to be awesome for you. There's a lot of grant programs out there. And you might say, Dan, I don't qualify because I make too much money, or I don't qualify because of this. Don't disqualify yourself. If there's some money out there, try to get it, okay? So how you do it, go right through here, hit the grant finder. You're going to spend about 5 minutes tops on this thing. It'll let you know if you can qualify for grants up to $7,500. Why do we have the grants that we have down here? Well, they're forgivable, basically, is the easiest thing. We handle them for you during the loan process, and they're forgivable, meaning you don't have to pay them back. Kind of like those student loan payments that are out there. But they'll give you grants up to $7,500. This is how you check to see what you're eligible for, if you're eligible for. But if you're out there and you're like, Dan, I'm kicking the tires, I'm trying to buy my first house, maybe in my second home, maybe an investment property. If you have that, or you're maybe looking to refinance. You bought back in October last year and rates were 8.25. Now rates are 7. I wouldn't suggest it, but maybe we start kicking the tires to say, okay, does it make sense at these levels? At what level would it make sense? Those are all the things that we can help you with. So how do you reach out to us? We'll go to the rateupdate.com. You want to put in an application right there. If you want to call us, just scroll down to the bottom. Right through here, you're going to find that information as well. You're going to get our 800 number as well as my email address right down through here. So that's it for this morning, guys. Rates are coming off just a little bit based on the economic news we had that was breaking this morning. I'll come out in a couple more hours to give you a midday or maybe even a closing bell update to see where the heck end mortgage rates finish for the day and the whys. And then I'll also go over what the rest of the week is probably going to look like in regards to mortgage rates. Thanks so much for watching, guys. God bless. Have a fantastic day. See you back here shortly. Bye-bye.